Hey guys, welcome to Stock Talk on July 23rd. Now today we have some very exciting and fascinating news, and I think a lot of you guys were waiting for this news because you were asking me like, when is the course being released? What is in the course? And all those questions and more is going to be answered today. So you guys get a sneak peek. So are you excited? A sneak peek at the course itself, and you guys will be the first people to do it, whether you're on YouTube or you're on the Facebook page. Welcome everyone to the sneak peek of the course itself. Now before we get started, I want to show you guys that and tell you guys that it will be on the Teachable platform. So it will be in the format of video lectures and video format courses. I think it's easier to digest, especially if you're looking at charts. It's just easier to follow along in a video format. Now, what's also another big portion is there's going to be hundreds of multiple choice questions attached to those specific lectures or specific course material. And it is critical, in my opinion, for you guys to hone in on those skills, not only in observing the videos, but also answering and applying those skills in a written format as well. So let's take a look at the course. So here we go. So you guys can see on this page, this is just a brief introduction of what the course might look like. And so you guys can see that we have an introduction. So things like very basic things, creating a watch list, setting up indicators, my application settings on the Thinkorswim platform. Then we move on to the basics, the markets. You have to know the basics, reading the chart, the different time frames, price and time, and yeah, so you guys can see these are just some of the topics that are in the introduction of the course. Now, I'm going to show you guys one specific page. So for example, the page is called News Influencing Emotions, or the impact of news. So you guys can see that you can play this video right here. And then finally, if you just scroll down, and this is not completely finalized, but you guys can see if we scroll down, there are quiz questions. For example, questions 1 to 3 refer to the 180-day chart of IQ as shown below. And then you might get a question like, what is the best possible trade of IQ given IQ's current trajectory? And, this is, just based off of what you've learned in the past. How do you apply those skills and make sure that you make the correct decisions? Now, as you guys know, there is no decision that will be correct 100% of the time. But in order for you guys to complete this course and learn from this course, it is about minimizing risk. Minimizing risk, maximizing your potential, and that's the whole point of the stock market, right? Controlling your emotions and making smart trades, which is what this course is all about. So yeah, that's your sneak peek. Hopefully you guys enjoyed it. Let's talk about SPY, the S&P 500, tracking general market movement as always on the 180-day chart. Now, we've talked about in previous videos that really the trend has not changed for that much. And you guys can see that really the trend hasn't changed in the last few days. Look at the support at around 279.60. Now the support is actually, you guys can see that this has been more actively acting as a support. So let's just move this line just a tad bit, showing that we do have a support around 279 exactly. And we'll just compensate because that's where the market told us where the support was. Now, what are we doing right now? We're actually, what are we doing? We are going sideways, and that's perfectly fine. As we consolidate sideways, the market is garnering the energy for another push up. Now, remember, even if we start heading back down, which is not what we saw today, actually, for the first few hours, we did see that downtrend, but we managed to kind of recover right afterwards, like a couple hours later. We can still fall towards the 276.50 to 275.80 mark and still be bullish. If the market start dipping, I expect this area to start acting as a support. Now, if it continues dipping, then we expect around 273 to act as support. But either way, any close below this level could be a short-term bearish sign, which is 278.60. But we do expect the markets to be pulling in the bullish direction. Even if we get to the upper red line, that would still correlate with a possible and probable bullish trajectory by the market. So right now it's consolidating sideways. We could see it, consolidate sideways for a couple more days. Or remember, if we manage to close above this high at 281.30, we expect a very, rather effortless push to the 284 mark. So this is why I've been long with the markets, and when it's been dipping, I've been accumulating more. If it's going higher, then I'm not really doing much because I am waiting for that push to the 284 mark. When it happens, it doesn't really matter. It just probable that it will happen, and that's all that really matters for me. Looking at TVIX, or volatility, on the 180-day chart, you guys can see that volatility, as we expected, right, actually continued to fall. Now we're below the light blue line, or the 20 EMA line. I feel like I'm a broken record every time when I talk about TVIX, because chances are it's going down and it's below some sort of SMA or EMA lines. So that makes complete sense. I hope you guys do understand that as the markets do push higher, we expect volatility to go lower. And that is exactly what we're seeing for volatility right now. All right, let's take a look at crude oil. I'm going to take you guys to intraday crude oil. Remember, I was looking for crude oil to come back down to which area? Actually, to the 180-day the yellow line. I'll show you guys that in a moment. And the one thing, look at crude oil. We pushed higher. At one point, we were 1% higher, over 1% higher for the day. And we managed to get to 69.30, got rejected, and now we made a low of 67.60 intraday. Now let's take a look at the 180-day chart. Now, actually, I'm going to show you guys the 1-year chart, because the yellow line was at the 1-year chart. Can you guys see that? Here's the yellow line, right? Did we test this line here, right, which acted as a support in the past? We have not. That line is at 65.60. We haven't reached that area yet, and I want you guys to take a look, especially on the 180-day. Why did we find resistance at this area, around this area? Look at that. Wasn't this the area of a breakdown candle? Can you guys see these two red candles right here? Let me just take off the VWAP really quick and just show you guys that. Can you guys see that easier? This was the start of the breakdown area, and we would expect resistance around this area. We actually didn't even manage to get to this area before we actually got rejected and crude oil came down. Now remember, I'm not looking for a position to crude oil until, if and when it reaches the 65.60 mark, then I would be looking for a reversal. But right now, you guys can see that we got a rejection at the 20 EMA, which has happened in the past on the 1-year chart. And now, there's a possible move back to the downside. But regardless, that is crude oil for you guys right now. Now, another one, very interesting trend, /GC gold futures. Gold futures on the 1-year chart showed a very nice reversal candle on this day. However, today we formed another kind of red candle right next to the green candle, showing a possible rejection, negating the effects of the previous day. Certainly not a very good sign for gold. And you guys know that I went into JNUG and my stop loss triggered on JNUG because I was playing a possible reversal back higher. Now you might be asking, well, Kevin, why are you doing that? Because we're at the low. Well, one, we are at the support area. You guys can see the long tail candle, but look at the candle that was formed today. We're looking at the 3-year weekly candles, and can you guys see that? Why we're continuing falling? Sure, there's a potential for the weekly candle to pull higher, but I just don't like this kind of trajectory right now. If I see a rebound back up, then I need a confirmation, a better confirmation this time, so I won't get fooled twice on gold. But you guys can see that even the best traders, will lose money, and that's just normal. We're human. The best traders will even lose money, and the thing that really makes the good traders from the bad traders is how much you lose and how much you manage the risk. If you're wrong, you got to be wrong quick and fast. You can't be wrong and you keep being wrong because you're holding onto a losing position. And you just have to know when to exit or when to pull that trigger. In that case, you guys, I just saw this candle and this was just enough for me. So hopefully you guys can see the kind of the same thing on gold futures. Okay, taking a look at natural gas. So nat gas has been pretty much doing the same thing. I told you guys that I wasn't convinced enough. I wasn't convinced enough on the 180-day chart that this was a pop over the 20 EMA and that we would stay over. I wasn't entirely convinced, and today, actually futures, you guys can see that it did manage to gap lower, and now we're back at the support around 2.716. No surprise there as natural gas continues to decline. I'm not looking into a position to UGAZ, which follows natural gas, even though we're at a support, because it's still declining. We don't have any sign of a reversal just yet. And number two, are we going to go into DGAZ? And in my opinion, no. In my opinion, I'm not going to go into DGAZ either, especially when we're at a natural gas support. So in this one, just stay on the sideline and watch it move. And that's all I'm doing. So for nat gas. All right, let's take a look at a couple of tickers that you guys are talking about. And the first one, you guys guessed it, right? MU. All right, so here's MU, Micron Technology. And one thing that's really interesting about this pattern is I want you guys to pay close attention to, how long we consolidated here and then how long we kind of moved up. And that was pretty much correlated with each other. And now you guys can see that, wow, look at this tail candle made by this 4 hours. Can you guys see that? Take you guys to the 1 year chart. Can you guys see this tail candle made at the support? Okay, so that's surely a pretty good sign for MU. As a matter of fact, if you looked at intraday MU, look how we went back down near the support, and I told you guys that's when I would start accumulating. As a matter of fact, I started accumulating, but I started accumulating shares when we broke the high. When we broke the high of this resistance area, I started accumulating, obviously a little later than I expected, but once I saw this reversal pattern, it was enough for me to start entering and putting more shares into MU at that point. So MU, so far it looks pretty good. So what do I expect for MU in the near future? Surely MU can still come down a little bit and fill that gap that was made. Can you guys oh, let's actually take a look at the 1 year chart. It can actually, it can actually go up and fill this gap that was made here, or it can come back down a little bit, kind of consolidate before it goes back up. Regardless, I do like this trend, especially what we saw from Micron Technology today, and therefore, there you go. All right, Trader Princess and Chris, I hope you liked it. All right, IQ. So you guys are requesting IQ. And so for IQ, you guys were asking, what are you doing with IQ? Am I still in IQ right now? Okay, so IQ, I actually exited when we started gapping down below the 20 EMA line. I started exiting, and then I started accumulating more shares at $33 back down here because we're at the support. It really saved me, I think, $2 or $2 per share, I believe, but not too much. I mean, well, given that IQ does move pretty quickly, I guess that is a little bit, but you guys can see we're at the support. Now, the one thing about IQ is we have earnings coming up next Monday, I believe. Now, next Monday, we have next Tuesday, we have earnings coming up, and this is just something, because this is the first this earnings, we were back down here, didn't really do much, but because we're kind of still very high up overall, speaking, there's a couple of trajectories that I'm looking at. Now, this, by no means is like actually just technical analysis. This is just what I'm thinking, because we don't have enough technical analysis to go off of as of right now. And therefore, I'm thinking that there's a probable trajectory breaking the support, coming back down, and it might just start freaking people out. And therefore, we're going to get sellers, and that's just my opinion. Sure, it can bounce off of that, but at some point, I think we're going to break this support, and then by earnings, it could move up. But I think there's a chance that it could even move down lower, possibly breaking this support, possibly breaking the $30 support and go lower before we see some buyers come back and push this back up. That's just what I'm thinking, because the markets love to trick people, and right now everyone can see this ascending pattern we're at the 200 SMA, or the red line on the 180-day chart. Everyone knows this is the support. What better way to trick people than for it to come down, break the support, especially on earnings, and then have the buyers come back right after, or 1 to 2 days after. And that's just a complete kind of speculation, okay? By no means is technical analysis, so don't quote me on this, but that could be one possibility that might happen. All right, let's take a look at SOXL. And Joe, Sykes, thank you for your ticker. So SOXL. All right, let's take a look at the 1-year chart. Oh, this is bullish semiconductors once again. So generally, as the markets are pulling higher, we do expect this one to start pulling higher as well. So you guys can see that right now we're in the middle, smack in the middle of a horizontal trajectory. So you have to ask yourself, are you willing to risk the 50%, 50% play? In my opinion, I would say there are better tickers to look at in which you can bet, bet on a better than 50 to 50 shot of getting it correct. And therefore, I would, even though I like this horizontal pattern, at the very least, I would start buying, near the bottom down here. This is the area I would start buying. This area is already questionable. That area is where I would sell. So even though I like this horizontal trend, it's just not the time, in my opinion, to take a position right now. And with that, thank you everyone for watching this video. Hopefully you guys enjoyed the sneak peek. If I didn't take care of your ticker, please put that ticker back up again. So I think Lang, sorry we didn't get to your ticker. And then there might be K9, Travis, sorry if I don't get your tickers, but I just want to kind of make this video short. It's already a little too long. So yeah. Thanks for watching. Let me know what you guys want to see in those future videos on the course, if I don't have them up already. And yeah, this is going to be a very fascinating time in the next few weeks. So I'll see you guys tomorrow. Happy trading. See ya.